Good morning, traders. Welcome to the new week and welcome to the Flow Show. Morning, Kay. Morning, Stel.
Good morning. Hello.
Good weekend, everyone.
Kids parties. So I'm not gonna say anymore.
Yeah. Okay.
Just 10 years to go, man. 10 years and I'm a free man.
How are you? For murder, mate. You get less for murder.
Yeah. How are you, Ryan? You're okay?
Yeah, not too bad, mate. Not too bad.
Good stuff.
It's what you guys think. Don't think that when they're out of the house, they're out of your pocket.
I know. Bigger worries then, right?
Yes.
They stay in your bank account. That's for sure.
Nice.
But anyway, we're kids. We love them. We love them. Right, let's get stuck into it. Going to have plenty to talk about this week, no doubt. We'll start off as we often do over in China. They're chucking more money at the property market to keep things propped up there. Some 56 billion injection of funds, if you like, going to be put forward to the property market. They're going to allow access to pre-sale funds or some pre-sale funds as well to help with that. So that's going to keep things, as I say, propped up over there. The COVID situation, we've still got this, to coin a phrase, optimizing of COVID policies. Let's call it that. There's still some areas that are going into lockdown or raising lockdowns, but we've had the confirmation that they are changing something to do with COVID, and that's likely to continue. So that'll be carrying on over there. We have had Xi is meeting every Tom, Dick and Harry at the G20 this week. He met Biden this morning. Not really any big comments coming out. Lots of we'll work together if you're all happy to work together, and no need for conflict and all that sort of palaver. But nothing that hints that there's going to be any strong cooperation coming out. That sort of thing. Certainly, as far as I could see at time of writing the notes, nothing on things like Russia and the oil price cap or stuff like that. So weak platitudes, let's call it that, from Xi and Biden. Xi's meeting plenty of other leaders on the sidelines this week as well, so expect lots more comments to come from that. Over in Japan, Kuroda said that the economy is picking up. Therefore, now is the time to continue easing. Go figure about that. He did say that the tight labour market and price gains that they're seeing now will reflect in wage negotiations in spring, which is obviously something that we've been speaking about. Kay was speaking about as soon as last week, about how wages will come up for renegotiation around the fiscal year, end of the fiscal year, turn of the new fiscal year, when everyone sets their budgets and things like that. So that's going to be a time where we potentially see a big inflation injection coming in, depending on how high those wage negotiations may go, and then the feed through from that into inflation. As we were pointing out, I don't know if it's last week or even the week before, we had there was a story we noted about, I think it was the US prompting Ukraine Zelensky to take the more high ground and talk about being willing to negotiate peace or look for peace. And we did say watch out for some headlines in case he pays lip service to that. Well, there was a headline out, I think it was Friday afternoon or overnight, which said from him saying, "We are ready for peace, but peace for all our country." So that was a headline from that. There's still a bit of stuff up in the air regarding this Kherson stuff. Ukraine have steamrolled into the city. Russia's obviously on the other side of the river now. A lot's been made of that withdrawal and how it's been an embarrassment for Putin. I shouldn't think they're going to be out the fight just yet. But anyway, Zelensky with those comments, maybe just a bit of, as I say, paying lip service and following what the US said, rather than actually meaning that they're going to sit down at the table. But we should be ready if such a thing should hopefully ever happen. So we'll keep an eye on that one there. let's go. Where should we go now? Let's go to the ECB. We had De Guindos coming out on Friday saying that the market had overreacted to the positive CPI data. And that's been a bit of a theme from some of the Fed members as well. Hawke Holtzman, a very big ECB hawk, says he doesn't know how he'll vote in December. Could be 50 or could be 75. DeCos said 75 pip hike in October doesn't imply similar in December. Bank of England, Temrero said that they would expect, or she would expect, the interest rate, if held at 3%, would reduce output further below potential. So that's a bit of a dovish comment, because saying that holding that high at 3% would potentially, as you said, reduce output, the potential. So a lot of the market is still keeping expectations for BOE hikes fairly on the low side, maybe 3.5%, something like that. That remains to be seen. She also said that policy in 2024 perhaps have to loosen to stop inflation falling below target. So keeping rates maybe as is, or close to that 3.5% in 2023, and then maybe starting the cuts in 2024. We'll see how that forecast plays out. BOE's Haskell said that the largest signs of activity suggest the UK is already slowing down. Whether we're going to see that or not, we've already seen it in the numbers, some slowing. A lot of the market is expecting the UK to go into recession quicker than a lot of other countries, and to come out of it slower. That's not often the case. The UK can move pretty quickly on the fundamentals, can change pretty quickly in the UK, more so than somewhere like the Eurozone and other countries. So again, we'll see if that forecast comes true. The 17th this week is when we get the Sunak-Hunt autumn statement. All this tax raising and stuff going on, so that's going to be something to watch out for later this week. It really has turned a complete 180 from the Truss policies and Kwarteng policies, where they were going to cut taxes and spend and try and get activity rising. They really are going completely the other way with some really harsh tax cuts, and I can't see how any of that is positive for the pound or the UK. Basically going on heavy on austerity at a time when a recession is coming. You want to be doing the opposite, trying to spur growth, not trying to do stuff to curtail it further. So it's going to be interesting to see what they come out with. I suspect we're going to get the old speaking out of both sides of the mouth, where we may get a load of tax hikes announced, but it's going to be faced off against the positive outcomes that those might bring, and there'll be some stuff chucked in there, no doubt, that will try to be stimulative for the economy in terms of what the government's trying to do. Because again, if you're going to go for austerity 2.0 a couple of years before an election, that's not a good cocktail. So I expect to see a lot of good spin thrown in at this announcement on the 17th. S&B's Jordan popped up on Friday as well, and he was seen, just from reading headlines, very hawkish, very strong on his message. He was saying that policy is not restrictive enough, and to bring inflation back towards the realms of price stability. They're ready to, well, one of the headlines threw up that they're ready to sell FX, but I think Kay looked into that, and it was ready to buy or sell FX, which is a line that they use at their prior statement. But just his comments were pretty strong coming at that time. So I think it's potentially indicating for another decent sized hike at their next meeting, which will be in December. They only meet quarterly. But the strength of the comments, I was almost expecting them to chuck out an intra-meeting hike. Such was that. What did you make of his comments, Kay?
Yeah, exactly that. The fact that he stressed they were not restrictive enough and raising the possibility of selling FX, it did cross my mind as well. Are they going to raise on Monday morning or so? or shall we wake up after the weekend and the hike is done? But no, they seem to want to buy a bit of time. When is their meeting, actually? I'm just trying to figure out. The 15th of December is still more than a month away, and we can't rule out the surprise, in my opinion. We can't rule it out completely. Still more than a month away. Yeah, let's say that if Swiss franc would come to weaken a bit from here, I may take a little punt on it, perhaps against the euro. So to check if they would come out with something, but it would be really a punt on whatever they may do. The fact is that yeah, you have the euro Swiss up there. Is good. That's a good one. We on the move back higher, we did not succeed to make it back to parity, which is telling enough for me right now. I think it's going to be capped on any percent and a half rallies. This should be capped, and I'd rather look at euro Swiss than dollar Swiss, and I'll explain a bit later. And my dollar feeling right now is a bit mixed, and yeah, I'd rather do it via euro Swiss or for the brave Swiss yen or so. But yeah, but yes, he came out like a reminder, saying that we may do something, right?
Yeah, well, it seemed very strong. You know, sometimes you get headlines popping up, and they're all a bit conversationalist, if you know what I mean. You know, they may have a strong message, but they don't read very strongly. You know, it's part of a conversation or whatever. But these headlines came out and they were very abrupt, if you know what I mean. You know, not sort of, oh yeah, well, if inflation keeps going, you know, we may get more restricted. It was boom, you know, policy is not restricted enough. We're ready to sell FX. We're ready to do this. We're ready to do that. And it just read really much stronger than what we've seen of late. And when you get headlines like that, you have to know how to read them and if there's any raising of risk to any particular action. So I think that's what happened now. So to move on to the other wafflers, we'll go over to the Fed. Fed Collins said there was a risk of the risk of over tightening has increased. Then Waller was out with some pretty strong comments late last night. Some of his stuff on the CPI was the same as what we heard from the likes of Daly and others, where he said CPI was just one report, you know, bit of a brush off. But he added that markets got way out in front, that the Fed has a long way to go. Rates will not fall until there's clear, strong evidence CPI is falling. So some really stronger comments there, and that hit dollar yen initially. Let's go to a shorter term chart. We did open in early trading down around 138.50s. What are you zooming in? And then we got this move up on those Waller comments that dropped. Did have a pullback, but it's been up since. And I think, as I said last week, I think the big risk from here is A, that the market has gone too far following the CPI report. And for that instance, we need to watch these lows down here, although we're plenty away from it now. And that there's a risk that the big man comes out and says something. That's Powell. If he pops up on the wires, going against this narrative or brushing CPI under the table, reaffirming what the Fed is there to do, then I could think we can see a bigger, stronger bounce in yields and dollar, and particularly this pair in particular. So lots of risks going in to this week, given what we saw last week. For trading it, it's still a bit jumpy, as you can see. You know, we're done you know, 200 pips since Sunday night, so you know, lots of movement, lots of volatility still here. Still probably going to take some time to shake itself out, but now we have some definitive lows coming in. This is what you want to be watching for. Any tests, probably 139s is your first level, 138.50s, 80s down to these lows. If we get and test those levels and hold them, that's going to give you a strong signal that we're potentially at least got a short-term bottom in play, and then, you know, we can give ourselves something to build on if you're looking for longs, that sort of thing. Kay, still, you got anything you want to add to the headline front?
Not really. I just want to reinforce what you said about the Fed, and you know, the market was very happy about CPI number, but we haven't heard from them, and I have a feeling that they're not going to be eager to do the much anticipated pivot. So I think they're probably going to be disappointing the market once again, but we still need to hear from them. So, you know, it's a question mark for choice. I think I agree with you. I think they're going to be probably on the hawkish side, well, at least compared to what the market's expecting. And I think we have one more leg to the upside in yields and the dollar before we go the other way in a big way.
Yes, it's going to be interesting to watch things like the data, because we've had this big move, you know, pretty much, you know, kicked off with a CPI report. If we get further bad data, and I'll look at some of the data we've got coming up this week, if we get further bad data, but we can't break these lows in something like dollar yen, that's going to tell you that the market has made its adjustment, if you like, for the bad data up to this point. Therein again leaves the issue, well, if it ain't going to go down anymore, which way is it going to go? Doesn't mean it's going to rally all the way back up to 147, 148, but it may mean that we see some decent rallies like we are today. We need to find out where it's going to run into resistance. Where are the sellers? Where are the pivoters going to say, okay, yeah, we've made our money, we're going to let you have some back, but this is the area we're going to come in and resell dollars. So a little bit of price discovery I think we're going to get this week to see, are we going to set up a new range, you know, maybe something like 138s, 142s, something like that. But yeah, I want to see a bit more discovery on the top side here to see where the resistance is, because I think even if we get good data, we're going to see the rallies being sold, but I want to know where. Kay, you got anything to add to what we've been talking about?
Yeah, it's G20 time, but looking at how difficult the G7 already had to come up with a statement, I guess the G20 will be even more of a cacophony. Interesting though was Yellen chatting over the weekend, says that in other words, that she heard the weaker economies and the weaker countries about the tightening and the dollar levels and stuff like that. And well, she said she acknowledged it, but she didn't really say that they were going to do much about it. We have to know Waller is one of the Uber hawks, so he'll probably be one of the last ones to flip to a much more dovish or a less hawkish stance. Yeah, and then as you said, the Bank of Japan, Kuroda, as I was already hinting, he seems to prepare the market for after I'm gone era, and so we have to see how the wages go. And on the data front, I think, and I've said it already a while ago, CPI is one thing. To get a good measure of what's going to happen, I think we have to look now, really focus our attention to growth data. If the growth data continue to show weakness and show that we are, or confirming that we are entering this recession, that's where a bit more shit could hit the fan, and volatility, especially volatility, increase because it's going to possibly even if you look at some assets, it may even counter pivot expectations, because if you look at if growth would really weaken, we could see the equity markets also starting to turn. So it's going to be important. And really, I've already been saying it in our chat room, but I think we're in for more volatility into the year end. Right now, I'm a bit more rangy in my approach, but I expect quite a bit of volatility going forward still.
Yeah, definitely, mate. And just to look at the data, we had the Michigan survey on Friday, which showed up some pretty awful numbers there in the main numbers, but they were countered somewhat by the inflation expectations. 1 year inflation expectations 5.1%, so higher. 5 year longer term inflation expectations higher as well. So just as we get a bad CPI report, consumers think that inflation is still going up,
so basically they feel really bad about the current situation, and it's about to get worse.
Exactly. But that's it. These things are important for the Fed because how people feel about inflation can affect how they react to it in terms of spending. If you think a price is going to go up in a year's time, you're going to bring forward spending. If you bring forward spending now, that leaves a potential glut in a year's time because you've spent that money you might have spent 2-3 months down the line. You've spent it now. You're not going to spend it then. So it's important to look at these inflation expectations because it can therefore drive different parts of the economy and how things work in that. But as I mentioned earlier, we've got a fairly busy week. This week, we've got a ton of data coming out. It's the first data from the US on manufacturing, starting with Empire State manufacturing tomorrow. Then later in the week, we get the Philly Fed. So the first two numbers there. Zoo survey from Germany tomorrow, some CPI numbers, UK jobs. It says Eurozone flash GDP, but I think that might be the second reading. I know we've had most of the countries' first readings. So the pan Eurozone number isn't usually that important. But more CPI, UK, Italy on Wednesday, US retail sales coming out as well. That's going to be important to look at. And we've got some housing market data coming in latest month which will be October stuff in the main. That continues on Thursday with housing starts and permits. As mentioned, the Philly Fed. Japan CPI coming out Thursday night or early Friday morning. We'll see if inflation's continuing to rise there. UK retails on Friday, some more housing numbers there from the US. So quite a busy week picking up this week. Obviously, some of the other events we're talking about, the G20, the Sunak or the Hunt autumn statement on Thursday. So lots to get stuck into this week and hopefully make some money off, which is the most important aspect. So speaking of making money, let's have a look what's going on here. Well, I closed out my dollar yen short from 148 last week, down at 141s. I thought that was enough after the CPI report. I haven't got back in yet. As I say, I'm just leaving this one a bit for the moment just to see where the levels show up and give me a bit more firm idea of the levels that we've got. Aussie dollar longs obviously progressing nicely from here, but here we have again signs that perhaps we're topping out up to the 67s. You'd have to forgive me, my mouse is not scrolling very well. Oh no, it's back. There we go. So that got up to, as you can see there, the 100 DMA pretty much, capping it there. Couldn't get as high as this fib level just yet. We're into the area where I was expecting things to get a bit more sticky, and thus is the case at the moment. I did take a little bit of profit on my longs on my highest entries, which was 64.75, I think 78, can't remember. I did take a little bit, Friday 66.60s, just to put a bit in the bank again, taking advantage of that move that we saw. Apart from that, I'm happy to sit in this. If we get a move down to back to these sort of break areas, I'll potentially look to add. I never got a chance in the end to try the break trade. Well, I tried the break trade once and then that failed last week. I didn't try the second one, so left waving goodbye to that. The question is going to be can we maintain these moves? And that is going to go the same for any dollar pair really. Euro dollar, pretty much the same. Can we maintain these gains? Can we get up to some of the levels we've been looking at? Bit of a zone here that we've hit, this 103s, mid 103s area, zone I've had for a while. It was a former support area, decent support area. then it became a form of resistance area, or became a resistance area. So no surprises that we found a bit of a brick wall into there. These are the steps pairs like this have got to take if we want to undo some of all this big drop this year and indeed further. These are the levels it's got to take out. We had the smaller levels down below that we watched for some months or some weeks. You remember we got up to parity, couldn't break it, had a lot of mincing around. Now we've had a little bit of break. It's on to the next level where it's got to break and continue on. So I'm sure a lot of people are waiting to buy the dips. A lot of people, if you weren't on these moves, you want to think, oh well, I want to catch it. I'm gonna buy every dip we get. You've got to be careful with that sort of strategy because it has been a big, strong move. You know, the bigger they go, the harder they fall sometimes. So the pullbacks can be a bit more than what you might be expecting. So you stick to your well-worn levels. Look at the levels that, as I say, we hit on the way up, that we found trouble. You know, we had this 102 area. We found it trouble when testing it previously. That's the sort of area, if you're going to be looking to try and jump in on the trend, or if you think any pullbacks are going to then bounce and continue higher, try maybe not to mess around in these sort of little zones. Wait for the big levels. And if you don't get the big levels, then maybe look to trade the breaks. You know, here we have this zone, decent resistance. If we break it, you're likely to continue. That's when you get into a break long perhaps, and that's how you get in on the trend and sit as far as it can go. Another one I just want to have a quick look at, then I'll palm it off to Kay. Gold. This is one where, again, playing with the moving averages, broke above the 100 DMA, moving up to this fib. That's my next big level. Then the 200 moving average up there, around about 1800, is a level I'm going to be looking at to potentially take some profit if we get up there. Still long this one. For the shorter term, again, looking at see where the levels may come in on any dips back. That's going to be, for me, down to this 1720 area, which, you know, maybe call it 1525, give it a nice $10 zone there. Get back down to there. If we hold there, that keeps this momentum in play. Then we can maybe push on, test the highs again, or even further. So really, if you're not in these moves, as I say, look at decent places to get in. Don't just grab any old dip and think, yeah, that's where I'm going to get in. You know, give yourself something to lean against. Conversely, if you're shorting some of these moves up here, you might make some decent pips at the moment, but be very wary if we start making new highs, even if it's by a few pips. You know, if we knock up to 74, 75s and then drop back again, that will suggest we still are not done with this move. So read the price action, because that's the most important part of watching your screens. Kay, do you want to have, or Stel, I don't know if you've got anything to add to metals or whatnot at the moment, or Kay, you can toss up who wants to take it.
I just want to make a comment. I don't really have that much to say today. Two things actually I want to mention. One, the move we saw last week was, you know, pretty severe in terms of the dollar yields. You know, I hear so many people saying, right, this was it. The Fed is turning. This was the top in the dollar. They top in yields. I would just say, don't be so hasty. You know, let's wait to see what the Fed tells us. And that's why I'm still a little bit hesitant in metals. You know, I'm long silver. I've done 3 little trades. I'm around half the size I want to be, average just above 21. But I'm not going all guns blazing. Still waiting. You know, it's you need patience because we don't have confirmation yet. So that's one thing. The other thing I want to say is crypto land. I don't think this is over. I really don't. The damage done is huge, you know, both in terms of financial damage, but most importantly, the confidence, you know, the emotion of part of cryptos. I think a lot of people have been really hurt, and there is a lot of institutional interest over the past couple of years, and you know, we all know this is good and bad, and at this moment I think it's bad because cryptos have become, or they had become, really big enough to matter, and I think there's going to be one more leg lower, because it's just the shockwave of what happened is just massive, in my opinion. I don't see how anybody would want to say, right, this is the bottom, I'm getting in. I don't think so. I still think we have one leg lower. So I'd be very careful trying to buy a dip in cryptos. Obviously, these things move massively. Like, they're up 3% today. I don't know why, but maybe because they've been down 30% in the last week. But just be careful. That's what I'm saying.
Yeah, I mean, technically looking at Bitcoin, it looked quite clear. We got this, it's a bit of a big zone, but it's a zone nonetheless. Former support areas, and they're in as resistance already. So from the technical perspective, if Bitcoin needs to go up, it needs to get above and hold above that zone. If it can't, then the downside beckons and potentially sets up for a bit of range between the lows and this area here. So if you are trading it on the technical basis, your levels on that one. Okay,
Yep.
Can you have a little look around, mate?
Yeah.
Look around the field.
First of all, going to show the yields. Still, can you? I don't know if you were planning to go, but
no, I'm here.
Stick around. Yeah, okay. Because I've got a question about or observation, and maybe we can have a little chat about the metals on some point. So first of all, the 2-year, the short term. We've had those. This is still something we can't explain. We don't think we have been up there. The real high must have been somewhere, perhaps even around 474.5. Anyway, we are in this channel or wedge. We tried to break out, but holding. Now the market is trying to hold it. I'd watch levels of 4.25 and then 420. It's nice little zone here, which should be holding. If this gives way, which I don't think it should right now, because of still the Fed is going on and their terminal rate should be above this zone. So if this would give way, really, and to me, it would mean that something is really wrong on the economic side of things, and that it's impossible for the Fed to continue to hike rates, because the economy is in such trouble. So watch the 420, I would say, on the 2s for a starter, and on the 10s, we've held the 50 DMA, 380, 383. Again, I'd argue, as long as there's a window, whether it's a small one or larger one, for a softer or softish whatever landing, whatever your base case may be, respect this 380 zone on the 10-year, and then below there's another one around 10 BPs or so lower, around 370. And again, if that would start to give way, then it may give us a clearer signal that something is really wrong in the economy and really slowing down. So, but for the time being, I'd say personally that we are going to hold these levels and going into a more rangy pattern. I don't think on the 10s, for instance, that there's enough good news in the economy to get back above 4.25, 4.15, 4.25. I think that's really going to cap it right now, if we would have a move up there already. But as we've seen in the past, the 4% is a bit of a crossroad, and I wouldn't really be surprised if we get and hover around this 4% again for a while, and let the other moving averages catch up, perhaps. But anyway, as I was saying earlier, to me the real economic data are now going to really matter, combined, of course, with CPI, PPI. I'd say PPI is very volatile. I wouldn't be surprised it impacts, because it's a front runner of what the CPI may say, may tell us. But personally, I'd rather trade real CPI and then the growth data going forward. Okay, moving on to the metals. silver especially, and that's where I wanted to pick Stel's brains a little bit. So we have seen these midterm elections. We're still not sure about what's happening in the House, but the Senate seems to be kept by the Democrats, and that means that they will try to accelerate some of Biden's stimulus plans. I've read something about a $280 billion package, and I've also heard Schumer and Pelosi and also Yellen trying to urge them on to do something about the debt ceiling, the upcoming debt ceiling issues. And Schumer was saying that they would do something in the next couple of weeks, or try to get it through in the next couple of weeks. So there's I'm going to say my observation would be that it should be positive, this one, despite what happens on all the rest. My second observation is, why is it not higher this morning? And really, okay, there's a part of dollars, there's a part of yields. I understand, and I would argue, let's look more at gold for the yield side of things. But this one, in my opinion, should really start to see beats and underpinned. What do you think?
I think you're absolutely right in terms of it being positive. Why are we down today? You said it, yields, dollar, and it's just a short-term reaction. We also have, I think, profit taking, because let's face it, it's been a very good run last week.
Yeah.
So I think in the short term, and if you look at, it's all metals, gold, silver, platinum is down 2.5%, palladium almost 3%. It's just across the board, the commodities are getting hurt a little bit today. I think that's a short-term move. I think it is positive. I agree with you. I'm just fearful of the Feds coming in to spoil the party again. And as for them passing all these measures and plans and all that, they're going to get passed eventually, one way or another, because they need to be passed. And as for the debt ceiling, it's not the ceiling; it's just a bloody level. It just keep raising it. So one way or another, things are going to get done. Money's going to get spent by either government, whoever wins the House, the Senate, it doesn't matter at the end of the day. They're all here to spend. That's what they do. I've always said, and I laugh about it. I think metals prices, there's a big risk for metals prices lower. There's two. One, they find an asteroid that they mine, and we finally get 3 trillion tons of gold somewhere. But the other is if I start seeing governments producing big or not big, producing surpluses consistently. That for me is a risk, because that means that money supply stops expanding, or it doesn't need to expand, and then that's going to be a force against commodities, against everything. But this will never happen. I mean, I think we know this by now. The deficits are going to be there. The U.S. deficit is over 1 trillion now per year, and it's become the norm. So as long as that happens, for me, this force will drive everything higher. The question is, how do you get there? What the best level you can pick to take a trade, because these things can take years to come through. So anyway, I agree with you. I agree with you 100%.
Yeah, I'm long too, and I still prefer the less shiny stuff than gold, but they probably will move in tandem. Just replying to a couple of questions there. We have already spoken about these. Somebody is asking why Swiss is so much stronger. That was S&P last Friday. Jordan saying that they could even sell FX if needed, and that they were still not in restrictive territory. So that's why the Swiss is stronger. Quickly looking through another question. Perhaps Ryan can scroll through the chat while I run through a couple of dollar yen. Yes, Ryan already said. We in the chat room, we in our Flowonomics room, we were speaking about this yen strength as well on Friday, and a couple of us have been loading up on a little dollar yen and euro yen as well, because we thought it was a little overdone. There were some very interesting levels coming up in the dollar yen. You can see it here. The 138.64 is the 61.8 of the the run up from 130 to 150. That came in here, and dollar yen just overshot by a couple of pips, and then pre-opening, somebody was trying, I think, to get stops out of the way below this level, and then afterwards, as soon as it opened, Waller gave the excuse to take it higher, in my opinion, but whatever was to happen, in my opinion, it would have happened anyway. Perhaps not to the same extent, not to the same speed. He sent dollar yen up 100 and some points on the opening, but afterwards we did a retest, sub 139. It looks to me, if I look at the timing, that must have been around the Japanese fixing time. And then we gradually started to move higher. I'd say, where can it go to? Well, this zone here, 141.65, 141.90, 142. It was a bit of a target for some people as well. On the tech side, around 142. Get up to 142, perhaps, and then see what happens. If we don't reach there, and if we start to lose this this prior bottom here around 140.30s, 140 and a quarter, 140.25. If we close below there, it may mean that we have to retest the lows there. But then this one was also a bit interesting. We're still in this rising wedge on the euro yen. We had this sharp drop when dollar yen collapsed on Thursday and Friday. We did tested it, but everything was so violent, so fast. I really missed that. But then on the Friday's fixing, a couple of us went long in here. We had a little dip on the fix. We had a little dip on the fixing on Friday here. You can see this one. Where was it? Yeah. No, this is today. Friday. Yeah, around here we had this little dip there, tiptoed and took a little bit off on the way up. I think 145. This is going to be an intermediate resistance here. 144.90 to 145.10. We could build in a pause and then see what happens. As I said, I've already lightened up some and looking perhaps the low 144s into low 143s to try it again. First of all, the move was a bit fast, and secondly, yes, as I said on Friday, there's one of the fundamental reasons why yen should be weakened has at least temporarily dropped away, because the current account is going back into positive. Also the Bank of Japan members are starting to talk a bit positive about the economy, but they have been doing that for the past decade, really. But then Kuroda says they will continue to with their easing policy, not change anything right now. Stimulus packages are putting it in place, watering down the national finances. I still think there's enough reason for the yen not to strengthen on a permanent basis. But know your levels, as we always say. If this thing goes breaks through the 143, 142 3/4, 142.40, we have enough little levels here. If that breaks, then we may be talking about a different pattern or a different move in play on the yen in the more medium term. Yeah, this one is a funny one. This euro sterling. I'm with Ryan. I don't think it's a great thing that we are going to get out of the budget, austerity and stuff. But then I'm seeing equally plans that they may push the more painful measures a bit further out and just try to regain some brownie points first, and saying that they will help the weaker ones. But then look at this euro sterling. We had this. We were in this upward channel for a while, broken down. We build another base here, and another one, and another one. We are like in successive waves. And but what I do see is that over the past couple of sessions, we are having a bit of trouble here to stay below 87. So if we ever get below 87, 25, 30, run down to 87, and then we see what's to happen there. Equally to the top side, seeing, I think there's some decent range players in there now, trying to keep it in the range. Perhaps, I don't know, some have bigger options in play which are not reported in the CFTC data. But it looks to me like there's some decent range players now in this market. I may try to catch a bit of a knife again if it comes down to 87. I also think that austerity may not be the best plan right now, but the 17th, keep that in mind. The 17th, sterling is going to move, so keep that in mind. For later this week, it's gonna move the sterling. Whatever happens in whichever way. On the euro, it's pretty clear. 103, and we've been talking about that before. 103.50, massive move, massive level. If it goes, we may actually, if it really goes and holds, that's the most important thing. Next one should be up in the 104.75, 105s, but who would exclude a move back into up into the 108? But personally, listening to the Fed, listening to the ECB, I'm not sure that euro is already ready to go for the big bounce. So I'm going to repeat what I've been saying. I think we're in ranges now. They could be volatile. But I do think we are in for a bit of range trading. Keep an eye on the 102. That's going to be our first real support zone. If we get back below, well, then we're talking about parity. 100.50, 101 is going to be a bit of a level. But really, yeah, I'm ready for a bit more range trading. Oh yeah, dollar China. It's a bit of a bummer. This morning I was hoping that these positive China lines and the outlook for the Biden Xi meeting would take us closer to 7 or even below to load them up again, because there's two things going on in China really. So we have those reopening rumors and plans, and they did put is it a 16 or 22 points plan in place to gradually reopen and to support businesses. But at the same time, we are seeing record new cases popping up, and the PBOC is injecting money. And of course, you don't see that on the charts, of course. But my personal view is that they won't let the yuan strengthen too much either. If you plan to reopen, the worst thing that could happen right now is that you inject money and you try to actually let the economy get through the worst suffering, and then you get speculators starting to buy your currency in size. I think that sooner or later PBOC is going now to try and stop the rot in here. And if you want to get your economy going, which is an economy based on exports, you don't want your currency to strengthen too fast. So to me, anything 7 or close to just below is worth a try. There's some relatively easy levels to lean against, which is a 695. So any build up from 701, 702, but we're already back at 707. So I may have missed that boat here. MEX was an interesting one last week. It's a bit of a strange one, but as I was saying several times in the room, and we've seen it especially on I think this is more a cross move than a dollar MEX move really. We've seen the whole America's bloc lose steam versus the low yielders. Let's put it that way: the Swiss, the euro, and the yen in particular. So in the dollar MEX, I think we are coming into interesting levels here around 965. If that would go, there's more waiting, 75.80 in my opinion. I don't know, depending on your idea on the dollar, this could be an interesting zone to monitor. If we need to get back below 1948.50 to start to look at the downside again.
Why is that one bounce so hard, do you think?
Sorry?
Why is that one bounce so hard considering
the dollar mix? That's what I'm saying. I think it's a cross trade, and I was saying last week as well. I think carry trades have been unwound on this leg. We had seen a lot of carry trades building up, including on the retail side, including myself. And I think those carry trades. Well, I was pretty fortunate to get out of it at a decent level. But I think there's been a lot of carry trades unwind in this leg last week, basically, and therefore we need to start to look at topside levels again. I think because unless the economic data really weaken, I think there may be levels, and the levels may be close now in stuff like Euro MEX, or if you look at MEX yen, which I haven't looked at for a long time, but MEX yen maybe another one. But I think that is what happened, and I was telling about it when we were here. I said like, wow, this is not looking great for the carry trades. And then the Banxico confirmed. We only had like a minor dip on Banxico, as well in the euro mix as in the dollar mix, and then we started to go the other way around. And Friday really we went up like 2.5% on Friday, and I think that's the revenge of the low yield, as I call it. Yeah, but this is now. I think. I'm not saying it's gone far enough. It all depends on what's happening, but yeah, I'll be looking to give me some bounces. This is the 2040s is going to be the magic level in my opinion. Give me some bounces. I may get interested. And really, Ryan, for a Monday, that's sufficient. Giving it back to you.
Yeah, thanks, mate. Don't want to give all the gold away so early in the week. Yeah, I've not got much more to add to that for today, I think. So we shall leave it there. Thank you as always for coming to the Flow Show. We wish you a good week ahead. Stay tuned. Come in and see us each day this time of the morning. Have fun. Trade safe. Thank you, Kay. Thank you, Stel. And
cheers,
we
guys.
see you all back here tomorrow. Don't be late.
Thanks, everybody.
Ta-ta.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.